Good morning and welcome to another live technical analysis. Today we're going to be doing a combination of fundamentals with technical analysis. So we're going to be starting off with the euro against the dollar. So as you can see in yesterday's trading session, it moved higher and today it's slightly lower. Now, I would personally be attributing the small rise of the euro against the dollar, in particular to comments by ECB Kazimir, who hinted that the bank would be remaining at their current interest levels for a prolonged period of time. Now, we should also note that he was a vocal ECB member that would have liked more hikes. So he clearly said that he would like another 25 basis point hike. Therefore, the switch in his apparent tone to slightly being more uh, dovish in nature could also indicate that the ECB has reached its terminal rate. So there's a bit of an imbalance in terms of what we're anticipating and what is actually happening. In theory, if the ECB is done raising interest rates, then that in theory would have allowed other pairs to capitalize against the euro. But the slight rise of the euro against the dollar could could perhaps indicate that with the Fed being expected to remain on pause later on this week during their interest rates meeting, if they do remain on pause, then the markets may be weighing the options of if the Fed does remain on pause, then is the Fed more likely to cut earlier than the Eurozone? Since the ECB has clearly stated that they're going to be maintaining current interest levels for a prolonged period of time, whereas the Fed might have to start cutting sooner than the ECB, therefore potentially allowing the euro to gain against the Fed. So even if the ECB has reached its terminal rate, personally, I would be thinking that perhaps the Fed is due to cut interest rates earlier than the ECB. Furthermore, if in the Fed post meeting conference the Fed chair is slightly dovish, we might see a further weakening of the dollar and an appreciation of the euro. But on a technical basis, note how the Bollinger Bands are narrowing. The pair is currently above RS1 at the 1.0670 figure. Narrowing of the Bollinger Band still at the mid range. The RSI indicator below our chart is at the figure of 50, implying a neutral market sentiment. Therefore, I would be maintaining a neutral outlook for the pair at this point in time. Note that it is still validating our downwards moving trend line. So there is a potential for it to move slightly lower. But for now, I would be maintaining a neutral outlook up until the Fed's interest rate decision. Moving on to the pound, let's switch to the daily. On the daily, the pound appears to have remained relatively neutral against the greenback. As you can see, it barely, let's just zoom in, slightly higher. But you could say that it's a minor change, so minimal. Today it appears to be moving slightly lower, but remaining between the opening and closing figure, therefore nothing too much. We should note that the BOE's interest rate decision is also due out later on during this week, with markets anticipating a 25 basis point hike. So, based on the anticipation of a 25 basis point hike, we might see the pound appreciating against the US dollar should the meeting minutes or the post conference statements indicate that the bank is willing to hike further into the future. The issue with the UK, in my opinion, at this point in time, is you have a slightly struggling economy, either due to Brexit or for other reasons. Your economy is slightly struggling. You have very high rents in your country. There is a bit of an issue with accommodation. And then you have inflation rates, which are still pretty high. Therefore, if you were the UK government, or at least the Bank of England, perhaps there's some more leeway in comparison to the ECB and the Fed for you to hike further on in the future. So I'd be very interested to see what happens after the interest rate decision. I would expect it though to come in at 25 basis points for now, perhaps more hawkish in the future. On a technical level, though, we would be maintaining a bearish outlook due to the fact that it's below the mid-range of the Bollinger Bands, still validating our downwards moving trend line since the 30th of August approximately, and is aiming for the support level at the 1.2310 mark. So maintaining a bearish outlook if it breaks S1 and moves towards S2. For a bullish outlook, it will need to break above R1 and move towards R2. For sideways, remaining between S1 and R1. Even if it does break the upwards moving trend line, if it does not make a clear break above R1, I would not maintain a bullish outlook for the pair. Dollar against the Japanese yen. So switching on to the daily, that moved slightly lower yesterday, remaining between the opening and closing figures of yesterday. Still, from a macro perspective, it's still bullish. Upwards moving trend line as well, formed on the 23rd of August. On a 4-hour chart, we can see that the pair is currently testing the R1 level at the $147.80 mark, finding some resistance, but it's still above the mid-range of the Bollinger Bands, moving higher. So I would maintain a bullish outlook for the pair, despite it moving slightly towards the 50 RSI figure, which would have implied initial market sentiment. Based on the other technical analysis factors, I would be maintaining a bullish outlook for the pair. However, once again, the BOJ has an interest rate decision on Friday morning. I do not expect them to switch from the ultra loose monetary policy, so expecting them to stay at minus 0.10%. However, after in the post press conference, it would be interesting to see BOJ Governor Rueda as to how he might answer some particular questions. And why am I saying some particular questions? There is a sort of speculation that the BOJ may be abandoning its ultra loose monetary policy. Maybe not now, but perhaps in the year 2024, that might become a reality. So I would be expecting reporters to be asking the BOJ governor questions regarding this subject. And if he does sound hawkish, I would not be surprised if the Japanese yen gains against the dollar. However, if it's very dovish and then allows the pair to move towards R2 at the 149.40 level, then we're closing to the point where the BOJ intervened last time. Therefore, even if it does reach R2, if it does aim for R3, personally, I would expect an intervention by the BOJ. Therefore, perhaps for this week, a bullish outlook, but by next week, perhaps I would be switching to a more bearish outlook, depending on how the governor answers certain questions. We're going to be looking at the dollar against the CAD. So the loonie is appreciating against the dollar. It broke above our upwards moving trend line, but is still continuing to move in a downwards fashion. The RSI is at the figure of 13, implying a strong bearish market sentiment. It's below the mid-range of the Bollinger Bands. Therefore, even if there is a small market correction back up to S1, which is support now turn resistance, we would still maintain a bearish outlook. So why is the CAD appreciating against the US dollar? Well, simply put, oil. Before we finish our technical analysis with um, with the dollar against the Canadian dollar, I'm quickly going to be trying to show the price of oil. Brent crude has reached $95 per barrel. WTI cash is above the 90 figure, implying a bullish market sentiment. So we're going to be doing a technical analysis on oil in just a few moments, but I'm showing you the chart in order to justify the movement seen by the Canadian dollar against the greenback. Given that Canada is a major oil exporter, an increase in the price of oil there would translate into a stronger currency for the Canadian dollar due to them being a predominant oil exporter, which is what you're seeing at this point in time. But since it's broken below S1, this is now support and resistance. Let's just bring in our new levels. And then for our keeping R2 the same and R3, R1 becomes R2 and R2 becomes R3. and the S2 becomes S1. And we had this sideways moving channel would could possibly be my S3. So this would be S3 at the 1.120. 1.3 3,225. So we have S1, S2, and S3. We're maintaining a bearish outlook for the current pair on a few reasons. One, the Fed is expected to remain on to remain on pause, therefore potentially weakening the greenback. Secondly, oil. Oil is moving higher and higher, therefore, given Canada's status as an oil-producing nation who is exporting oil as well, therefore appreciating their currency. So bearish outlook for the pair. We're going to be moving on to oil before moving on to the precious metal in just a moment. So for oil, as we've said before, it's moving in an upwards fashion. Note that it's fluctuated around R1 at the 90.40 level and is broken above and is moving higher. It's also continuing to validate our upwards moving trend line. In addition to the RSI figure being near 70, implies a bullish market sentiment. From a fundamental level, Saudi Arabia wants oil prices higher. So does Russia. They want them higher, but Russia does not necessarily want to reduce their exports. They want prices higher, but they still want to export a large amount of oil to generate revenue, etc., etc., etc. The question is, how long can oil remain at elevated levels? 90.40 past moving to the 92.85 or even 95. Extreme scenario moving towards the $100 per barrel figure. In my opinion, the issues with China are structural. There are fundamental issues at play. Look at Evergrande or Country Garden. These were major developers in China who are having issues. Evergrande recently dropped 25% within a trading day. There are issues with those companies. And in my opinion, no matter how much the Chinese government is attempting to prevent panic or perhaps those issues seeping into the market, there's still going to be an issue with China. For example, Foxconn is moving their factories away from China. They're moving to India. If I'm not mistaken, it was yesterday that Foxconn announced that they're going to be doubling their output productivity or capacity at their Indian manufacturing plants. They're moving away. JP Morgan a few months ago said they were closing down their Asian division before re-entering. People are seeing that there's some issues with the Chinese economy. There was also a report that came out that said China is not expected to outpace the US as the world's largest economy anytime soon due to their current issues. So, based on the fact that they're fundamental, and how does this translate to oil and to gold in just a moment? China is the world's largest oil importer. If the Chinese economy is not going well, then I would not be surprised if oil moves sharply lower. So even if it is moving upwards for now, from a more macro perspective, I think that it will come back down. But that remains to be seen. For now, at least on a technical level, we're maintaining a bullish outlook for the short term to mid term. But on a long term basis, maintaining a bearish outlook. So R2 becomes R1, R3 becomes R2. As a reminder, this is support turned resistance. R2 at the $95.50 mark, and then we have the 98.80 for R3. R1, R2, and R3. So as we said before, bullish outlook from a technical basis, but on a fundamental level, maintaining a bearish outlook. We're going to be looking at gold as well. Weakening of the dollar has allowed perhaps gold to capitalize on that weakness, moving higher. 1935 is R1. 1920 is our newest one. It's broken above resistance to support, another bullish indicator in the market. RSI is near 70, implying a strong bullish market sentiment. On the 4-hour, I can even draw an upwards moving channel, just like that. Needs to be validated again. An upwards moving channel could be very narrow for certain traders, but you could also just simply put an upwards moving trend line. Therefore, still a bullish sign. On the daily, it's 4 days moving higher in a row. This could have been a higher low, moving higher today, aiming for R1. And so the question remains, where is R3? Well, for R3, not this horizontal line, excuse me, vertical. $1,970 would be my R3. Pretty far from R2, but since it is aiming for R1 currently, then I'd like to have some space between R2 and R3. So we're maintaining a bullish outlook for the precious metal. Should it make a clear break above R2 and validates our upwards moving trend line? Not as much the channel, more emphasis on the trend line, and it needs to break above R1 and R2. If it simply breaks above R1 and comes back below, that would not be a strong bullish indicator for me. Whereas for a bearish outlook, it would need to break below our upwards moving trend line, which would coincide with the upwards moving channel, and S1 before moving towards S2, with the next target being S3. We're going to be looking at Sociedad General. So Sociedad General, as you can see, this volume gap right here. It broke, well, it opened at this level due to the fact that in the bank's restructuring, there was, if I'm not mistaken, a few comments in regards to the bank's profitability being perhaps lower for the foreseeable future, despite attempts by the bank to cut costs, etc., and increase productivity, which has been reflected in the market. It's moved lower. And why not? Let's play some support and resistance levels for Banco. So, excuse me, for Sociedad General. If you're interested in bank stocks, I would be looking at another bank that we are offering, which is, if I'm not mistaken, Banco Santander, located at the bottom of our MT4. Banco Santander, B Santander is the ticker. Just need to find it in just a moment. Banco Bilbao, Banco Santander. Banco Santander earlier on today announced that there will be restructuring certain departments, so cutting costs, increasing efficiency, bringing multiple departments under one. Therefore, I would not be surprised if the bank stock moves higher. But Sociedad General, the difference with the certain bank is that they, if I'm not mistaken, revised their profitability goals for the year, perhaps lower, which is why it's moving in a downwards fashion. So S1 would be at the $22.45 mark. S1 at the $22.45 mark. S2 at the $20.75 mark. We're going to be looking for S3 as well. I'm looking for a swing low, validated by a wick as well. 1 and 2. 19.10. So you have S1, S2, and S3. So you might be asking, so now how are we going to find R1, R2, and R3? Before the announcement yesterday, it could have been said that it was moving in a sideways fashion. Look at this fairly beautiful channel, almost perfectly aligned, starting from the 22nd of June, roughly around there. But we need to bring, there we go. It can't be simply floating. Wonderful. It was moving in an upwards fashion, upwards moving channel, broke below. So for R1, the swing low, 23.80. As I'm placing our resistance levels, on a more fundamental note, we have multiple central banks are due to release their interest rate decisions later on during this week. We have Sweden, we have the UK, we have the US, we have Turkey, we have Japan, and I think Norway as well. Multiple interest rate decisions, therefore potential for very high volatility in the forex markets. So be slightly careful when trading during those days. There is a potential for very high movements to occur. 24, 50 pips. Slightly over exaggerated in this one as 2-3. But nonetheless, at least for now, a bearish outlook. I think there's going to be a small market correction higher before moving lower and breaking below S1 and S2. I personally do not think it's going to be reaching S3, but that's S3 if it does move towards that level. For a bullish outlook, it would need to break above R1 and R2 before moving higher, entering back again within our upwards moving channel. And I think that's it for today. Thank you for watching, and until next time.
To another video of IronFX. My name is Emily, and today we'll be looking at margin level. So what is margin level? Margin level indicates the health of your accounts. It is the percentage value based on the amount of equity versus used margin. In other words, margin level allows you to know how much of your funds are available for new trades. The higher the margin level, the more free margin you have available to trade. And the lower the margin level, the less free margin you have available to trade. A basic rule of thumb is the higher the margin level, the less possible it is for the trader to face a stop out. Your trading platform will automatically calculate and display your margin level. If you don't have any trades open, your margin level will be 0. So why is margin level so important? Forex brokers use margin levels to determine whether you can open additional positions. Different brokers set different margin level limits, but most brokers This means that when your equity is equal or less than your used margin, you will not be able to open any new positions. If you want to open new positions, you will have to close existing positions first. Hope you found this video useful and interesting. In the next video, we'll be looking at margin call level.
Good morning, good evening, good afternoon, wherever you are. Hi, Moses. Did I pronounce your name correctly? Thanks for tuning in. You're the first one. Okay. Yes. All right. Yeah. Let's see how many people gonna join me or gonna join us today. Yeah, the previous webinar, I think it's only me. Yeah, is if only you and I, maybe it's like easy, or you can ask me anything you want. Yeah, just wait for a couple of minutes and then we can start. Where are you tuning in from? Wow, Kenya. Okay. I'm in Singapore. That's far away. Okay. I know been there though. Yes, Singapore is nice. Yes. Have you been to Singapore? Not yet. Okay. Maybe we will start in 2 minutes then. Okay. Now it's about 6. I don't know what time over there, but my time is about 6 p.m. Yeah. 1 p.m. Okay. Nice. Well, at least I have somebody to talk to, not only me. Yeah, today you're gonna learn something. If we finish the section early, and then I will bring you to the chart. And then if you have any question or any pairs you want me to look at, I will help you. I will help you to look at those pair currency or any indices or commodities also. All right. Just wait for 1 minute. All right, I think we can start the section for today. Okay, so thank you so much for tuning in today. Moses, right? If I pronounce not correct, I apologize. Okay, so today a session I'm going to talk about pivot point strategies. I'm not sure whether you use this strategy before or this gonna be your first time, but along the way, if you have any question, you can just ask me anytime you want, all right? Because I will have a screen open for any question. Okay. So again, guys, disclaimer. Okay. This webinar is purely educational, and nothing in this webinar should be construed as investment or trading advice. So please do your own due diligence before trading. All right. I use it in Trading Central. Nice. Okay, that's good. Okay. All right. So about myself, my name is Peggy. Sorry. Let me see. My name is Peggy. I'm trade analyst and a prop trader at Ever Fortune Group. We in collaboration with IronFX. We are award-winning research firm finalists in 2019, 20, and 21 for best FX and equity research. Okay. Okay, so the agenda for today, I'm going to talk about what are pivot points, the different type of pivot points, or what time frame should you use for pivot points, and adding them, into your strategies. Okay, so okay, let me see. Pivot point, right? The pivot point refer to technical analysis indicator used to identify level of support and resistance, and it's calculated based on the previous day high and low and closing price. So you can see that how you're going to calculate a pivot point or PP is by using higher plus low plus close divided by 3. Okay, and how you're going to find a resistance 1, which is you use the PP multiple by 2 minus a low of value, right? And support 1, you take a pivot point multiple by 2 minus higher value. And the fourth one, resistance 2, you take a pivot point plus high minus low. Okay, support 2, you take pivot point minus high and low, high minus low, and then you take minus pivot point. So I think all this is good to know, I think, but I think there is some software, or if you go to TradingView, you can use the pivot point, which is created by other. I think you can do that, which is I'm going to maybe show you later in the light chart. Okay. Okay, so I believe that you may or you may not heard about different type of pivot point. Okay, so trading point pivot point standard consists with pivot point and the support resistance level. So if you go to, let me bring you to the chart, right? This is the one I'm talking about. Okay, but I filter out if you go to TradingView, okay, and then you search for indicator, which is pivot point. You just pick the standard one. So from here, I just filter out those like support and resistance 3 to 5, because usually I only use like 1 or 2. So I just filter out, and this is standard how it look like. Okay, it helps you to find support and resistance, but for my own personal trading style, usually I like to draw and support and resistance myself. Okay, I bring you back to the slide here. Okay, and second one would be Fibonacci pivot point, which is they are using Fibonacci retracement level in their calculation, which is the Fibonacci ratio is going to be 23.6%, 38.2%, and 61.8%. Okay. Camarilla pivot point is developed by Nick Scott, primarily used for intra-day trading strategies. Okay, Woody pivot point more emphasize on a closing price relative to the high and low price, and DMARC pivot point developed by Tom DMARC, calculated based on the relationship between the pivot point high, low, and close prices, right? All this I think is good to know, but it's not necessary for you to know all this, because everything you can find in here. Either you want to use the standard traditional one, which is this one I'm using. Okay, after that I will teach you how to use it, or you can use the Fibonacci, okay, which is I just mentioned, Woody, or you can use classic, or you can use DMARC or Camarilla, this one. Okay, either you see which one is help you to find more support and resistance, right? But usually I will use traditional one. Okay. After the section, I will bring you how to use it. All right. Let me know if you have any question. Okay, what time frame should you use for pivot point? So you mentioned that you use pivot point in a trading central, right? So usually what time frame you using, like H4 and H1? All right. Okay. Yeah. Actually, you can use in H1, H4, or you can use in daily time frame, or maybe weekly or monthly. It depends what type of trader you are. But yeah, usually I use a H4 the most, and then H1 if I want to do like scalp. Yeah, I will use H1 as well. So it depends on which time frame you want, but actually it's like I say, depend on your trading type, right? Okay, let me see. And again, pivot point you need to combine with other indicators, right? So you cannot use only pivot point to trade. Okay. Oh, okay. So now let me bring you to the charts. Let's practice. Okay. For example, at let me put the watermark for you so you know which time frame I'm at. Okay, so I'm at EUR USD in H4. For example, excuse me, just apologize, I had a flu. Okay, so you can see that in H4. Okay, this is the pivot point, right? If I were to draw support and resistance, or I want to find the entry, usually I will put from here, right? It's either here, or I would think of put to here. If you put to from here, this is gonna be your pivot point, right? Because here you may miss the entry. Okay, that's why usually I don't use this indicator to find support and resistance. I prefer to draw myself. But actually, if you put from here, for example, you draw from here, you will get a very nice entry here, right? Okay, here. And then next your target. First, your target, it could be this one, right? And you can see that here, it used to be low, but here it's calculated here. So we will see if gonna hit your first support, which is your first support gonna be your first profit taking. Okay, you can say profit 1 or take profit 2. Okay, here. Or if we move to, let's say we go to the lead time frame. Okay, I think this indicator is like more on daily or intra trading. You can see that over here, this is a pivot point, right? So when price break, you sell here, right? You sell here, and then it really hit your first support or your first profit taking. So are you using? Well, sorry for that. Okay. So are you using any indicator from TradingView, or you have your own software, or you draw support and resistance yourself? Yeah, just have a flu. Yeah. Yeah. All right. Cool. Yeah. Me too. I don't really use this the pivot point, right? Usually I like to draw myself. So I think it's it's more precise, and then you can find the level very nicely. For example, but I think this one is good for daily time frame. You can see from here, and it hits your first support already, but it takes about, because we are in daily time frame, right? So if you go up here 1, 2, 3, 4, 5, it takes about 5 days, and then you hit your take profit 5 days, right? But usually we are kind of like day trade. So let I don't use, for example, right? Okay, let me find. Okay. Okay, for this one, this is your pivot, right? Your pivot point. When you see that price is break, you can see that price is break here, or you can wait until this one is closed, and then you can open your sale position at this level, right? This level. After that, you can see that price touch your first support, which is your first profit taking over here. Okay. You can try this pivot point traditional, because usually I think this one is quite popular one. If you want to try Fibonacci, I think the level is still okay. But if you want to use, I suggest that you can use with, how to draw Fibo, right? You know that? Do you know how to draw? For example, if you want to use this with your you want to find confluence, right? You can draw Fibo from here to here, for example. But you can run through again. Okay, let me figure out first. For example, now you know that you want to find support resistance, you want to find confluence, right? You can use Fibo, draw from here to here. Okay, you may ask me why I don't draw from this high, right? Because you can see I don't pick this high, because this is the prior retrace from here, so it's a new high, so I pick the recent high, okay, which is this one. And then you can see that, let me find the Fibo price, like over here. I will show you 50 to 61%, and then we can pull out. Okay. All right. Over here, you can see that when we pull out, this is your, let me zoom in slowly. Okay. I think this is your pivot point, right? The price came down and retraced. This one price haven't retraced, yeah. So now I think price retraced at this one. So this one should be, again, around 38. You can see 38.2% here and 23.6. So I pick 23 and 28. Okay. Do you see that here? Okay. and here. And from here, if you know how to draw Fibo from here, this is the level that I was talking about, right? Okay. And then the price touch or retrace at 23.6% and then revert and then hit your first support, which is your take profit. Yeah. So see, let's say if you use this indicator, they will ask you that this is your pivot point, right? Around this one, right? But then you will miss the entry because actually price is retraced at 73.6%. Let me find the level. See? Okay, over here, right? Like again, I find that this is a very nice level. The wick here and here. This one of another Fibo that you can use, right? Okay, let me find another example. For example, maybe we go to gold. For example, gold. I remove drawing. I think this previous point is very good for gold, right? You can see that this is really pivot point here at 2020, okay, 2020 here. After the pivot point, you can see that price react. I zoom in. I find that this is very nice level because if you know, yeah, okay, I think so. I think it worked very well. For example, like if you know how to draw, like you draw Fibo yourself, right? Support and resistance, and you know that even though if you drag from here or here, for example, right, or even like here, is to me, I think is I zoom in, yeah, they peak at this level. If you were to drag here, they will peak from here. I think they peak from here. Why? You can see price react from this point 1, 2, 3, 4, 5, right? This is the support, and after that it break below the support, this one, and then it's become resistance, right? This very nice level. Okay, you can see that price react 1, 2, 3, 4 times. Okay, big long wick, and then from there price all the way hit your profit, which is okay. Let me draw the Fibo. Okay. Okay, if I want to draw Fibo from here to find confluence, from here, I draw from here to here. Okay, this is the low already. Okay, maybe here. Okay, I don't pick here because let's say we talk, we plan our setup, and then this is the low in H4. Okay, and then you can see I zoom in for you. You can see that price from here to here, it retraces at above 50%, okay? Or you can take like, actually I will pick 61, okay? The reason why I pick 61, and then I will find a confluence, which is this the one, right? Okay. Then you see that, okay, these have a confluence because they have a pivot point, and then it's really in the area of 61.8%, which is a golden ratio for Fibo. All right, when the pie touches, and then you can see it's all the way down. Here's our profit. Okay, so now I'm seeing that price is already at support already. Okay, let's see if it can like bounce from here. From this, it's almost like second, but I think we'll pick here for gold. We just see. Okay, let me find another example of gold. So are you trade gold the most or currency pair? Hi, welcome, Hamad, right? Apologize if I pronounce your name incorrect. Okay, welcome for the section. Okay, now it's just like guide you how to use the pivot point. Okay, that's cool. Okay, maybe we can try for those pair if see the pivot point is work very well, right? For example, here, let's say I'm go to this zoom in. Okay, so I'm not sure when you join the section, but now I'm at if you want to find indicator, okay, you just go to pivot point here, and then you pick the pivot point standard, okay. Over here, if you go to setting, you can see that there is a field, so you can pick which one is work very well with the pair that you are currently that you want to trade, but the most famous one is trade traditional, okay. And over here I just unselect those like support and resistance 3 to 4 because usually I just use 1 and 2. Okay, so back to here, you can see that this one, if we were to draw back at this previous point, right, you can see that it's almost line up with the wick here. Okay, zoom in more, and let me draw the Fibo. Let me unfilter first. Okay, this is like the area that I want like looking at, right? For example, like here, if you know how to trade, this is another area. Is demand supply zone here, right? If you know how to trade the demand and supply, okay, this is demand and supply, right? And then I think I want to find conference, okay? I draw the Fibo from here to here. Okay, I think this is gonna be at 38 by 2%. Right, you can see that there is already two conference. One here is line up really nicely with 38.2%, and you know that this is a hidden bid or this is supply zone, right? And then you pull out the pivot point. I zoom in for you. Okay, and you see that it's slightly, if you use the indicator, it's slightly below, but if you know how to draw Fibo for supply zone, you will get the trade from here. Okay, but if you want to be like very safe and careful, like you very careful trader, or you want to wait for confirmation, right? You can wait the pivot point here, and then you can see that there is very big bearish candle. Okay, I zoom in for you. This is very big bearish candle. Okay, you wait for price to break the pivot point, and then you wait for price to retrace or pull back. Okay, this is a pullback, and then you sell from here. Okay, you get what I mean? Then yes, my name pronoun was correct. Yeah, thank you. Okay, so this is a safe way for you, but if you are very aggressive trader like me, but actually I know that this is the zone, and then it's lively 90 with 38.2%. I may not wait for the price to pull back, but if you are very wait for confirmation, you just wait for price to break the previous point, and then pull back, and then you sell from here. All right, okay, let me look for AU. All right, AU here. Let's see it work well with this pair as well. Oh. Okay, let's see. Okay. Let me. Okay. Don't see this first. All right. If I were to draw Fibo, okay, this is, I will draw from here. Always draw Fibo from your left to your right. Okay. Always left to the right. Okay. Always, because sometimes people say, no, actually you can draw from your right to the left, something like that. No, it's always from your left here, and then you draw from your to the right here, and then you can see that this is very nice, 38.2% Fibo level. Okay, and around this level, right? This is your first resistance, for example, and then you want to find confluence. Wow, we can see this is very nice level here. You see that? For example, if we don't see this one, yeah, like if we don't see this one, okay, for example, okay, and there is no pivot point, right, for example, and then now you draw already, and then you want to wait for the price, okay, to retrace. I draw from here to here, yeah, okay, you see that price retrace here, boom, right, and then it hit. This is your first TP, which is your recent low, which is this low, right? Okay, and then you can see that price is bound up already for a USD. Yeah, left to right, got it. Yes, thank you. Okay, I think this one also work quite well with the pivot point also. But again, if you know how to combine with Fibonacci, and you know how to find support and resistance, I think it's like you can use this tool to find a confluence, right, to support your trade analysis. Okay, this will work very well. Let me. Okay, for example now, let's say you say that, okay, it hit your profit, and then you want to see where the price is going to retrace, right? You draw from this high to this low. Okay, first they need to pass 23.6% first. Okay, 23.6%. Oop, no, okay. I use this one. Okay, 23.6% is passed already. Now it moved up already. So now 23.6% is not bearish anymore. You just choose 38, right? So 38 here. And sorry, why it's like that? Okay, let me. And you know that this is have the supply zone. Okay, if you know how to trade demand and supply, this is a drop base here, right, and then drop here. Okay, so now I think price is still on downtrend for the AUD USD. Okay, you can see that price is below cloud, one of another strategies. Okay, there is a lot of indicator you can use to support your argument, right? Like why you want to trade at this level. Okay, now it's price. You can watch at this level, which is I highlight. You can see that when the price in H4, it touched at this, it's bound a little bit. Okay, and then we pull out the pivot point. So over here, now we hit our profit already. But if you use this one, this is your first profit taking, which is they use at this low, which is this week. Okay, slightly like this week, right? So I think usually we won't wait until that's right. Okay, you can do that as well. Oh, he left already. It's okay. Okay, so this is the one that you can use. Okay. Or this is the another, for example, this is the one. Okay, for this pivot point, right, you can see that this one, when price, if you draw, you will draw from here, right? This is due to be your like a recent high. Okay, and price break above, break below, and then break above here, and then you wait for the price to pull back, like from here, and then you buy. Okay. Let's go to another pair. US 30 with Dow Jones. Let me see if work very well with indices. Where is my, okay, never mind. I'll put US 30. US 30. We use okay, let me see. We use this one. Okay. Okay. All right. In all here, also, it at previous point here, right? When you see that previous point, you wait for price to break below, and then you wait for the price to pull back here, right? And then you sell. Okay, it's almost reaching your first support, which is your take profit. Usually, if I trade, my profit is gonna be at the wick on my left or my body, just to make sure that I secure my profit first. But this one is just a little bit almost hitting your first support. I think this indicator is work well with gold, right? Just now we were looking at gold. I think indices also, like we try another indices, which is US 500. You trade any indices or the only like 4 pair you mentioned? Okay, let me look at the US 500. I think US 500 is also work quite well also. Like here, for example, here the price is break below previous point, right? You wait for price to pull just a little bit and then you sell from here. You need to see I'm not just trading them. Okay. Okay. This is let me see. Is this work well? Okay. If over here you know how to draw. Okay, actually this is the level here, right? Is okay? Okay, let me show you. So when I want to find support and resistance, if I draw from here, okay, you can see that US 500, okay, price, this used to be resistance, it break, and then now become a support. And then it, like this level is hold very nicely, right? And then you pull up the pivot point. Oops. Yeah. Okay. You can see that price is slightly, okay, let me zoom in. Over here, used to be your resistance, right? They calculate, I think they calculate from this week, okay? But to me, if I want to draw, I will draw from here. They calculate using this one, resistance, and now it's break resistance. So it's break resistance, it's become the support, right? And then that's why they put the pivot point here. So when the price is break, the zoom in and see, pick the resistance. Over here, you wait for price to pull back, which is this candle, the red one, right? Okay, the red one, and then price fly away. You see, all the way, boom. Hitting your second resistance, which is here, right? I think this pivot point is work well with gold and indices, but With currency pair, I think not really. Okay, but we try one more pair before I end the section. For example, here, if I were to draw my support and resistance, okay, this is my resistance, and I use Fibo. Okay, from here to here. Okay, from here to here, you can see that when the price reach at the lower point and then it's retraced at the 8.2%, and after that it's reverse. Okay, and we pull, you can see that here. It may not be exactly, but it's somewhere here, right? You will catch the trade as well. Okay, over here, and then you sell from this level. You sell from here this level because you draw Fibo. You know that it line up very nicely with the 8.2%, which is have confluence, and then it really line up somewhere near a pivot point as well, and then you sell. Okay, to me again, profit taking, I'll just put this low. Okay, so it already hit our profit. Okay, so here, but this indicator, your like first support is over here. To me, it's a bit far because I think they take this low, right? But usually we will take the recent low, which is at this low. Okay. Okay. Yes, that's all for today. Do you have any question or any pair you want me to look at? Then I have our time a little bit. You want to look at gold before we leave? Let's see where the gold heading to, right? Okay, let me look at the DXY. Okay, for the DXY, you know, right? The DXY is going up. Usually gold will coming down. So now DXY is US dollar is already at first resistance in H4. Even in daytime, it's already you may see the bounce here a little bit at this like swing. Okay, actually it's break above buffer resistance already, but this is at the previous point here. But you can see when it touch in daily time frame, the like long wick here, probably it's you retrace a little bit. Okay, okay, here. So we go back to gold. All right, my gold. I move in. I remove first. Where is gold heading to? I think this is the one that they need to. This is become resistant already, right? Because actually this long wick is my like support level. Okay, and then now you can see the price is already big. This low. Okay, so now I have to change to like maybe this low. Okay, I think this level should be 23.6%. Yeah, so you can look out for 2000 possible. This is already this is the level of the support. I will draw at the candle. Why I draw at the candle? Because it's a weak. I think price just whip out all the stop lot. Okay, and then it shoot up. And this level, you can see that a lot of big here. 1, 2, 3, like 4, 5, and then 6, 7. It cannot break 2. So this is very strong or the key support level to watch out. And we will see if price can go up until like let's say 2000, right? Yeah, I think this is my view of gold for like today, because gold is already like crazy since yesterday. All the way down, right? Okay. Yeah, I got stopped out. Yeah, it's really, it was so crazy. I was stopped out, last night. luckily I put my stop loss. Yeah, because actually my just stop loss just below. I didn't expect the goal fall below like 2,000, right? But it's already anyway. Thank you so much for joining me today. I hope. Oh, by the way, tomorrow I have another section which is gonna be live trading section. I hope to see you again. So tomorrow's section is gonna be goodbye. Yeah, just stop out in SL. Yeah, I know that. I also buy at 2,000, but you can see that price is just like crazy all the way, right? Yeah, so tomorrow's section is gonna be at same time. The section is gonna be live trading. So basically tomorrow we're gonna find the setup. Any pair that you want. So basically I will talk about those major pair, and that of course we'll cover those like commodities, which is oil, gold, and a bit of indices, right? Yeah. So hope to see you tomorrow, and thank you so much, and have a good afternoon in your time zone, right? Afternoon, and this is my evening. All right. Thank you so much. Yeah. Thank you. Have a good day and enjoy trading. Okay. Happy trading. I I think before I end the section, just give me the poll. Okay, but it's one person. I just launched. You just help me to let the webinar. Yeah. Only one person. Just give me a rating 1 to 5 star. I don't know whether you can see it. Thank you so much. All right. Thank you so much. Okay. Have a good day. I'll see you tomorrow. Yeah. Thank you. Bye. Stop sharing.